Hello guys. Before we start diving into how to use margin trading, I want to explain you why you want to use margin trading, because 99% of the people who do margin trading, they are doing it in a wrong way, in a completely wrong way, and this will hurt you more than to help you, right? And this is not my goal. My goal is to teach you something that has value to you and for you to benefit from it, right? Not to lose all your money. So I want to make sure that you understand why you want to use margin trading. So here I will talk about how the professionals use margin trading and why they use it, and how the new traders use margin trading, right? The newbies, right? The people that don't really know what's going on, the people who are playing a casino, right? Because in the way that they are using the margin trading is the same like to play in the casino. It's even worse than to play in the casino, actually. In the casino, you have higher chances um, than these people who use 100x margin, right? Or even more than that. So let's dive into why you don't want to be on this side. You want to use the margin as the professional are using it, right? And how they are using it, what they are using it for. So first, they are using it to lower their risk. What risk? And as you can see, the newbies, they do the opposite. They are increasing their risk. They don't even know what's their risk, right? They don't even have risk management and know what's their risk. But let me explain you what I mean by that. So to lower risk, what does that mean? It means that if their trading account is, let's say, $100,000, they, most of them, they don't really want to keep all this 100,000, for example, on Binance. Binance is the exchange that I'm going to teach you how to use margin trading, right? So if you don't want to keep all this money online on Binance, because Binance can be hacked all the time, your account can be hacked all the time, and this money can be gone, right? So if you don't want to keep all the money from your account on Binance, you can keep, let's say, 20%. You can keep 20,000 on Binance, and the other 80,000 to be in your bank, right? And this is how they lower their risk, and this is why they use margin trading. Because when they keep 20,000 on Binance, they will still be able to trade with 100,000. They will borrow the other 80,000 from Binance, right? They will still borrow, they will still use margin trading, but they are doing it in a manner to lower their risk, right? They still have 100,000 capital, trading capital, but they keep only 20,000 to lower their risk. If something happen, if someone hacked their account or something happened with Binance, they disappear. There are some crypto exchanges that just disappear, right? When I was starting before with the crypto, and there was one exchange, good thing I did not have a lot of money, they just closed doors, right? They just disappear. And this is how what can happen, right? Especially with these crypto exchanges that are new or something like this. So the main reason is to lower risk. The newbies on the other side, their usage to increase risk, right? They have, let's say, $1,000. That's all their trading capital. They will put everything on Binance, and they will borrow money from Binance to trade with 5,000 or $10,000, right? But their trading account is just 1,000, so they are increasing their risk, because if the trade goes against them, they can lose all their money, right? So this is the first that you have to be aware of. So if you don't want to keep your money, all your money on the trading on the exchange online, this is how you can utilize margin trading in your benefit, right? The second thing is the professionals, they are strict with their risk management. They are using margin. So in order to be strict with their risk management, what does that mean? I will show you what does that mean. Let me quickly open here to give you an idea. All right, so let's remove all this drawing. I'll just give you an idea. Let's go on a lower time frame, actually on a 15-minute time frame. Okay, let's imagine that now these are the 200 exponential and simple moving averages. Let me even remove the other one so you will not be confused. I can even just keep just one, so you have idea what's going on. Let me remove this as well, and the stochastic. All right, so this is the 200 simple moving average. Price is coming down here, and then it's regaining it. So let's say that for some reason you want to enter here, right? Because you see the moving average is upsloping. I mean, basically you have reasons to enter a trade here, right? And then your stop loss is going to be under this candle. If it price starts to go below here, you want to exit. So what you will see right now is that your stop loss is less than 1% away, is 0.30% away, right? So if you have a proper risk management and you are risking maximum 1% of your account on a single trade, because I will talk in detail in another video about risk management because it's crucial, right? So if you don't understand that, don't worry, you can even find the risk management video, watch it, and then come back to watch this one so you have an idea. But I believe most of you will know what I'm talking about. So if you are risking 1% of your account, it means that if your account is $1,000 and if the trade goes against you and you are losing $10, you are going to be stopped out, you are going to exit, right? Because you don't want to lose more than 1% of your account on a single trade. What is happening here, however, is that the stop loss is closer than 1%. So what does that mean? It means that you will have to enter a trade that have position size bigger than your trading account, right? So if your trading account is $1,000, you are going to need to buy for more than $1,000 here because your stop loss is. So let me give you another, let me explain you better. So let's put here one more. So if your stop loss is 1% away, which is right here, then you will have to, if your stop loss was going to be right here 1% away, then that means that you have to enter in this trade with your full account size, right? $1,000 if that's your account. I'm just giving you an example. But since the stop loss is much closer, that means that you are going to have to open a position that is much bigger than your account size. So this is when margin is coming into play. You can borrow money to enter a trade, but your risk is still managed, right? Your risk is still 1% of your account. You might enter on a $2,000-$3,000 position, but still if you lose this trade, you are going to lose $10, which is 1% of your account. I hope you are not getting lost here. If you have to, you can watch this video more, right? But this is the second reason why professionals are utilizing margin trading, right? I hope this is clear now for you. What is happening with the newbies? They don't even have risk management, right? They are not even aware how much they are risking, so they are not even doing what I'm showing. Some of them, they don't even have stop losses, right? They are just entering. Even if they have stop losses, they are not really having strict risk management. So this is why I will teach you in another lesson why strict risk management is so important. Strict risk management. It's not a should, it's not an if, it's a must that every time you have to enter with the proper risk management. So basically this is the differences between how professionals use margin and how newbies use margin. This side here, they are playing a casino again. And when you play, let me give you an explanation in the casino, right? In the casino, there are two sides. There's the casino and the player, right? And the player in the long term, they are always losing money. So in trading, you want to trade like the casino, right? You want to be like the casino. You want to have the odds on your side, to have risk management, to know that in the long term, you are going to make money. If you are going to use the margin like these people on this side, you just I mean, it doesn't even make sense to watch this course, because this is not what I'm going to teach you about, and you are going to lose this money, your money, I mean, in not the money that you paid for the course, the money that you have in your trading account, if you are not careful with the margin and you use it like these people on this side. So this is why here I have for you the reasons that you can use margin trading for, and these are the reasons that you can use it for. again, to lower your risk of holding all your money online on the exchange, just like I explained you earlier, like the professionals. What they are doing, if you have $10,000 trading account but you don't want to keep all the money on Binance because tomorrow your account might be hacked and you are afraid of this, you simply can put 2,000 on Binance and use margin trading to still trade just like you have a $10,000 account, right? The second reason, to be able to short, right? So you might want to short, not only to long, right? So this is another reason, and we are going to go into details. I will show you how exactly to short stuff. Shorting, basically it means to enter a position. For example, let me give you a, let's go back here. Let's just find a good example. Okay, let's just see here. I'll give you the same trade example. Now this is not how I trade based simply with the 200 simple moving average, but I just want to give you an example. So now you can see that you lost on the 15 minutes, you lost this 200 simple moving average. So let's say that you want to enter a short trade. Short trade, it means that you might enter on a short position here without even um, having the asset, right? You don't have to own Bitcoin to enter a short position. You can simply borrow Bitcoin from Binance, sell it here, right? And then buy it back at a lower price, then repay to Binance, and the piece that is left, that is your profit, it's going to be left for you, right? But for this, we are going to, I will talk about this in details in another video. And the third reason why you want to use margin trading is risk management, just as I explained you before. When you have to enter on a position that is bigger than your account size, this is when you want to use margin trading as well, right? So let's summarize now. 99% of the people are using margin in a wrong way. You don't want to be on these sites, you want to use the margin as the professionals do. These are the three reasons that you can use margin for: to lower your risk, to be able to short, and to have strict risk management system when you have to enter on a bigger trade with position size bigger than your account. This is the reasons that you want to use margin trading. So this is it for this video. Hello guys, this video is about the advantages that the margin trading is giving you on Binance. So these are the main one, right? Let's just dive right into it. The first one is that you are able now to keep your money in USDT and still trade Bitcoin pairs with the margin trading much easier than it was before the margin trading was available, right? So what does that mean? Let me give you an example. So now if I'm watching, let's say, Ethereum Bitcoin pair and I want to trade it, I'm keeping my money in USDT, right, on Binance. My money are not in Bitcoin. And this is what I guess most of the people are doing. They are keeping their money in USDT. So now it's just easy to borrow Bitcoin and to trade this pair, right? But before, what I was doing is to buy Bitcoin with the USDT, then to enter this trade, because this pair Ethereum Bitcoin, I cannot buy it with USDT, right? I have to have Bitcoin to enter on a long here. Let's say that for some reason here there are nice reasons to enter a long trade, right? So I had to buy Bitcoin with my USD, and then with my Bitcoin to buy Ethereum here. But this is very tricky, because even though if this trade is in profit, in the same time, if the Bitcoin, let's say that I'm entering here, everything looks very nice, right? I'm entering somewhere here and this is starting to go up. But if in the same time the Bitcoin against USDT is going down, right, when I can be even at a loss, right? So this was very tricky and it was very hard to do that. So now with the margin trading, it's no longer like this. Now you can simply borrow Bitcoin and trade all these Bitcoin pairs that you like that are available for margin trading. So this is key, and this is very, very important element and very huge advantage right now. And you don't even have to care about the Bitcoin USDT price, because you are simply borrowing it What you have to care is this daily interest. Just like I show you, that's not a big of a deal. You are borrowing Bitcoin. The example that I gave you, again, I can show you how to calculate easier. Let's say that the position that you have to enter, now you want to enter Ethereum Bitcoin, right? And the position is $1,000. To calculate this, basically you have to borrow Bitcoin for $1,000 to enter this position Ethereum against Bitcoin, right? Long position right here. So what you're gonna do, you don't have to do that always, because you don't have to calculate these fees always. Just I'm just showing you how to do it, to be aware of how much you are going to pay. But of course you don't have to do that always. So let's say that you have to borrow Bitcoin for $1,000, then you will multiply by 0.002, and basically you will pay 20 cents fee. So this, you see, it's nothing almost. But before, it was very hard before this margin trading, because the Bitcoin can dump down 5%, and you end up losing money even though your trade was perfect. So it was very tricky to trade this. So this is the biggest advantage so far. The second one is that you can short altcoins, right? The altcoins now, they are starting to do some moves, but they are, in general, they are in a downtrend. Let's look at something like Bitcoin Cash, right? They are, or let's look something like Ripple. It's moving now, but it's in a downtrend since forever, right? And when the margin trading was not available, you could not, you were not able to participate in these huge moves down. But now with the margin trading, you can simply short this Ripple thing without even owning it. So this is the advantage of the margin trading. You don't have to own it to short it, and then you will buy it back lower and you will make money. And of course you can also do something else. If you like to keep your money in Bitcoin, let's say that let's look again at the Bitcoin. Oops, let me remove all this. So when the new bull market begins, right, when you are aware that the Bitcoin is in a bull market on scale, let's say on a weekly scale, you can simply buy with your USD account. You can simply put it into Bitcoin and hold the Bitcoin, right? If you are aware that the Bitcoin is in a bull market. Let me show you some better chart that has more history, like this one. We can even, let's just get rid of all this to give you an idea. Okay, if you are aware that the Bitcoin is in an uptrend, right, at scale, and you simply want to keep your money in Bitcoin, or for whatever other reason you are a believer and you want to keep your account in Bitcoin, you can do that. And still, when you want to trade USD pairs, you can do it simply borrowing USD, right? So these are the biggest advantages that the margin trading on Binance is giving you, right? Again, to summarize, most people are going to keep their money in USDT, but with the margin trading, you will still be able to trade Bitcoin pairs much easier, simply by borrowing Bitcoin, entering the trade, then exiting, repaying the Bitcoin. But I'll show you how to do that in details, don't worry, and making some money, right? You are able to short altcoins, and for the one of you that keep their money in Bitcoin, you will be able to still borrow USDT and trade USD pairs, right? So these are the main advantages. Hello guys, in this video I'm going to talk about the fees, the margin trading fees that you are going to be paying when you borrow assets, right? This is very important to know the fees. Here are the assets, right? The assets that are available for margin trading and that you will be able to borrow to margin trade. Here, as you can see, the interest, right? So this is the daily, this is an yearly interest, so you can have an idea. One thing that you will notice right away is not to short BNB, not to borrow BNB, right? This is crucial, guys. You have to be aware not to borrow BNB. As you can see, all others are around 7 or 10, around 10%, let's say, a little bit more or a little bit less. Actually, there are some that are much less. And look at Binance, 109%, right? 0.3% a day. So I'll show you now how to calculate this if you want, but that means that if you borrow BNB in 3 days, a little bit more than 3 days and some hours, you will have to pay 1%, right? In 3 days, each 3 days 1%, which is enormous. So I guess they made, I mean, it's not that I guess, it's obvious they made it on purpose, so you will not borrow, you will not short BNB. I mean, people will not be uh, really willing to short BNB. So this is the key here. Everything else is just normal, and it's actually perfect. I mean, the fees are not that bad at all. 10% yearly. You will. So basically, this is showing you in one day if you borrow, let's say 1,000. Let me show you how to calculate this. So the fees for USDT is 0.03% a day. So if you borrow $1,000, you will multiply by 0 because this is a percentage, right? So it means you will pay 30 cents in a day for $1,000 that you borrow. It means that for $10,000 you will pay $3 a day. For $100,000 you will pay $30, right? Which is not that bad. Let me show you how to calculate it again. $10,000 multiply 0.0003 $3, right? On a $10,000 that you borrow in one day, you will pay $3. So let me show you how to calculate on something else if you want. It's actually the same, right? So if you borrow Bitcoin, if you borrow one Bitcoin, but of course the fees will be in the pair that you bought. So if you borrow Bitcoin for $5,000, I will still calculate it in dollars. Uh, Again, you will borrow Bitcoin, but this Bitcoin is equivalent to dollars, right? So if you borrow Bitcoin equivalent to $5,000 and the fee is 0.002, it means that $1 you are going to be paying $1 a day. So it's not that bad at all. You can borrow everything, just don't borrow BNB, just like I told you, right? So this is how you calculate how much you are going to pay. And as you can see, for some pairs it's very low, right? 0.01 for some pairs. So most of the time you will be borrowing USDT or Bitcoin, and when you want to short something you will be borrowing all these cryptos, right? When you want to short them, because you will want to borrow them, sell them, and then buy them at cheaper price. But we are going to talk about this other stuff in this, I mean, in other videos in more in details. This video is mainly to be aware, for you to be aware for the fees and to be able to calculate, right? As you can see, this is the page because they can change these fees. I mean, at the moment when you are watching this video, they can be different. So this is basically where you are on Binance, when you basically where you are going to see the fees, margin fee. When in Google, when you type Binance margin fees, you will be able to see this page if you want to. So this is it for this video. Okay guys, this video is going to be about the different types of orders on Binance. Now I assume that most of you will be aware and will know how to use the different types of orders and what they are for, but just in case someone are not, this video is going to be about you guys that are not really aware. So if you know very well the different types of orders, you don't really have to go through this lecture. So let's just dive right into it. So there are three types: limit order, market order, and OCO, which means one cancels the other one. And it has two options, basically the stop loss, which is the stop loss, and then the one cancel the other one. And I will show you now and explain you why, basically in what case you want to use which one. So let's start with the market order. The market order, that's why it's called market, because it's executing basically at the current market price. When you want to buy fast and you don't really want to wait, you simply use market order, and the market order will buy the amount that you want at the current market price and will be executed right away. The limit order, on the other side, for the limit order you are setting a price that you want to buy, right? And this price will be can be of course lower than this is the idea, I mean to be lower than the current market price, but this order will be executed only if the price came to your price. So let's say now that I can set a limit order to buy Bitcoin at $1,000, right? With this amount here, of course, you are putting the amount of Bitcoin and the amount of dollars. So with this $38, you will see we can set a limit order to buy at price $1,000. Um, Basically, wait, we have to go to now the mode is important here to click on the normal mode, because just we were in the repay mode, you see, I mean I was in the repay mode, and you have to be careful mostly with the borrow mode, because sometimes you can be in the borrow mode and buy more than you like, right? So in the normal mode you have to be aware in what mode you are. Now we will set this limit order. What it does, it says the price cannot be lower. Okay, let's say 7,000 here, and we want to buy for the amount that we have. Oops, sorry, 70,000, I did not see that. Okay, so now finally the limit order was created. I don't know why it's still not showing here. Let's refresh the page and it should show now. The idea is that this order will be executed only if the price reaches there, right? This is key, so you can miss the boat, right? So this is why I'm saying that with the market order you are buying right away. With the limit order, here is the order. Okay, now as you can see, this we have a limit order. Now this order will be executed only if the price reaches again here. Don't worry, you are not paying any fees. You are only paying fees when the order is executed. So this order can stay there for 10 months, for 10 years if you wish. If the price does not come to this level, you are not going to pay anything. You are not paying per time that the order is open. You are paying only if the order is executed. So don't worry about that. This is the limit order. Again, a limit buy order, limit sell order is the same basically. Let's cancel this one. So for example, if you want to go short Bitcoin, I cannot show you a regular basically because I don't have Bitcoin, but let's say that you want to short Bitcoin at a price of $10,000. Put the amount that you want to short and simply set this order, right? And now this order will be executed. You will see it now down here. Bam, at $10,000. If the price came to this price, order to sell Bitcoin at $10,000 will be executed. So this is the limit one. The market I already explained you. This is why you don't set price here, because the price, the order will be executed at the current price. And now we are coming to the third option, which is one cancels the others and a stop limit. Stop limit is basically your stop loss. So let me give you a little bit of an example. The stop loss is key. I might actually make even another video about the stop loss, but I can explain you in this one. Actually, let's just look at some example. Let's get rid of all this. Make this clearer for you. Alright, so these are the 200 exponential and simple moving averages. Let's say that for some reason you entered because you price closed above, let's say that you entered here, or you waited for a test and you entered here, but you want to exit if the price came, let's say, below this level here, and you want to exit. So this is going to be your stop loss. So let's imagine that right now we are in a trade, alright, and you want to set your stop loss below this level. Basically, why you want to set a stop loss? You want to set your stop loss, just because you might be you are not going to stay on the computer 24/7, right? 24, I mean all the time. So you want, if the price came back to this level, you want to exit your position automatically. This is when the stop loss is coming into place. You can buy something, for example, imagine that we bought here. You can set your stop loss, which if the price came below this level, you are going to exit. So you don't have to sit and monitor this trade. You can simply go out and do something else if you like to, right? And if the price comes back here, your order will automatically be closed, right? So now I will market buy a little bit of Bitcoin for you. So in order to show you how to set a stop loss. So this is how you execute a market order. Simply put the whole amount, or we can even buy for less than the whole amount and buy Bitcoin. And now you will see here we are going to have a Bitcoin. Okay. Imagine that we did this somewhere around here. We bought because of some reason, and now we are going to set our stop loss below this level, which is 9,167. You can see here 9,167. How do you set a stop loss? Simply click here, set a stop limit. Now you have two basically places where you have to put price and the amount of Bitcoin. The amount of Bitcoin is clear, right? You are going to exit the whole position. So basically we are going to sell our Bitcoin. So this is clear what you are going to put here. What are these two prices now? Stop. In this here stop, it's basically your trigger price, which is going to be 9,167. This is your trigger. What does trigger mean? Trigger means that when price reach to this level, a limit order will be put on the exchange, right? A limit order will be put on the exchange when this trigger price got reached. You want your trigger price to be your stop loss level, which is in our case 9,167, right? Then what you are going to put here, a limit order. Now this, if you set a price here higher than this price, this does not guarantee that your order will be executed, because if the price of Bitcoin continue to go down, your limit order might not get executed. So what I will advise you to do is to set a little bit lower price here than this trigger price. So let's say you can put here 9,155. So what will happen in this case is when the price reach to this level, an order will be triggered on the exchange to sell Bitcoin at 9,155. Now this is key here, guys, to understand. You are not really going to sell at this price. You are going to sell at the current market price, which of course is going to be around this level, right? So you are the order basically the price that you will get for your order is going to be close to this price. So this is how you are going to make sure that you exit, because some people set the same price or higher price than this one, and then they wonder why their order does not get executed and the Bitcoin dropped down another 10%, and it end up when they come back to the computer, the price is already, let me draw this for you, the price is already down here, and their order did not get filled simply because they did not put they haven't done this little trick that I'm showing you right now. All right, so this is how you set a stop limit. Again, the stop price here is the trigger price. That is going to be your stop loss, and the limit order, you want it to be a little bit lower than this one, so you will make sure that this order will be executed, right? And you will exit your positions. And once you are ready to set this, basically, let me cancel it and show you again, because I should have showed you. Okay, let's set again the Bitcoin and show you what's going on here. So here is the explanation. If the last price drops to or below 9,167, an order to sell our amount of Bitcoin at price will be placed. So this is basically what you are doing with this order. And when this price is lower than this one, it's just making sure that you are going to exit, right? Even if it's dumped down. So now here is your order, and if this happens, it happens, you are going to exit. You don't have to watch the charts all the time. This is the simple stop loss. The other one, OCO. What does that mean? It means one cancel the other. This is better than the stop limit. This order gives you the option to set a take profit target. Let's see now. Now you have three options here: the stop, the limit, which is the same just like of what I showed you before. This is your stop loss, and you have one more option, which is the take profit. So now imagine the same scenario where you entered here and you want to set your stop loss below this level, right? You want to set your stop below this level. So if price came back here, which is 9,167, you are going to exit. But now you also have the option to set a take profit target. So let's say that for some reason there is some resistance or something and you expect the price to stop here, if it came back here to pause here, so you want to take profits here, and this level is 9,577. So now with this type of order you have the option to do like this. How much it was? 9,577. You have the option to do this and to do this from our previous example, right? So we are going to use the same example, 9,155. So these two are the stop loss from the previous example that you already know what is that about, right? And now the third option is the take profit option. So this order is going to do something amazing for you, right? Basically, if the one of these two things will happen, right? One of these two scenarios will happen. There is nothing in between, right? You are, let's say that you are buying here. You bought somewhere here. So it's either price will come to your stop loss or it will reach to here. One of these two things will happen. There is no other way around it, right? Unless price stays here forever, but this is not reasonable, right? So in this case, you bought here. If price comes to this level first, then the order will be executed. You will sell your Bitcoin and the other order will be cancelled, right? This is why it's called OCO, which means one cancels the other. So whichever of these two get executed first, the other will be automatically closed. The other scenario is that the price first came down here. It means that your stop loss will be triggered and you will exit this trade, and this order that is right here will be cancelled, right? So this is this OCO order. There is a very good option, right? To basically you enter your trade, you are setting your take profit, your stop loss, and then you don't even have to watch it, right? You don't even have to monitor it. You can simply go and do something else, and whatever happened later on when you come and sit, you will see if price reached here or it reached here. This is it basically, this order. So these are the three types of orders. I can summarize it for you again because this is the end of this video. The market order, which gives you the opportunity to buy right away at the current market price when you are in a rush. But before I do that, I can simply show it to you right now. Let's sell our Bitcoin that we bought. So let's say that we want to sell right away because we panic or something. Bam, simply the order is already here. The money are already here. The limit order, which gives you the option to buy at the price that you like, a limit buy or limit sell, right? And the OCO, which is the stop limit, the stop loss, and the other one that I just showed you right now, that gives you the opportunity to set on take profit target and stop loss, and whichever of the two occur first will be executed and the other one will be cancelled, right? So this is what we learned in this video, the three types of orders and how to use them and for what situations they are good. Okay guys, in this video I will show you how to open margin positions, right? So the first key is that not all pairs are available for margin trading. Not all cryptocurrencies on Binance are available for margin trading. In order for you to see the ones that are available, you have to simply click here in the margin tab and you will see all the pairs that are available. So once you came here to the margin tab, now you see Bitcoin pairs, USDT pairs, all pairs that are available. Now you can also search. So let's go to Bitcoin USDT and I will show you how to open and to close a margin positions, right? So here you have a little bit of steps. They even have a margin tutorial that I will play it now together with you. So it will give you an idea as well. And after this, I will show you with practice how to, I mean in reality, how to open and to close margin positions. So first, let's check this tutorial together, right?
Get started with Binance margin trading. With Binance margin trading, you can borrow funds to perform leveraged trading, which amplifies both profit and risk. Follow these 4 easy steps to complete margin trading within 1 minute. Step 1. Open a margin account. Log into your Binance account, then go to the BTC USDT trading interface. Select the cross margin or isolated margin tab. Click on Open Now to open the corresponding margin account. Step 2. Transfer collateral. Click on Transfer and enter 1000 USDT. Click on Confirm. Then transfer 1000 USDT as collateral from your spot wallet to your margin wallet. Step 3. Auto borrow trade. Place an order and borrow funds automatically. Let's suppose that the BTC price is about 5000 USDT. Select Borrow. Insert the price 5000. Insert the quantity 1 and click on Margin by BTC. Once the order is fulfilled, user would have bought 1 BTC with the 1000 USDT collateral and borrowed 4000 USDT automatically. Step 4. Auto repay trade. Place an order. Once it is fulfilled, repay the borrowed amount automatically. Let's suppose that BTC is about 6000 USDT now. Select Repay. Insert price 6000. Select 100% for the quantity and click on Sell BTC. Once the order is fulfilled, the borrowed 4000 USDT will be refunded automatically, and the user will earn 1000 USDT profit. If the exchange fees and interest are ignored, in this case, the user would gain 100% profit and earn up to 5 times profits in Binance margin trading. If, after closing the position, the profit generated is not enough to repay the borrowed amount, the system will not deduct it automatically from the user's wallet. The user will have to refund manually the owed amount. How simple is it? Please open the cross or isolated margin account and try it.
Okay, back to business now. I showed you this video on purpose because they are showing you also how to open a margin account. I cannot show you because I already opened mine, and they also showed you how to transfer funds, right? You simply can come to this button here, transfer, and then you can transfer from your spot wallet to your margin wallet. Here you can pick wherever you like to transfer, right? So in my spot wallet I don't really have anything, but if I can actually show you, I can first transfer from, but I'm in a position right now, so probably it will not really let me to transfer. Let's try to transfer from the margin to spot and then back. Yes, the transfer is completed. So now, as you can see, I don't really have any USDT. What also I can show you is here, basically you can click on wallet and you can see spot wallet and margin account. Let's open it both. So they are separate, right? Your spot account and your margin wallet. I mean, these are separate wallets. So in order to margin trade, you have to transfer funds, right? You have to transfer funds from your spot account to your margin account. Now, as you can see, the money I have 38 USDT, let's say, in the spot account. So now this is the margin account, right? The wallet where you will be able to see your account equity, how much you borrowed and everything, right? But maybe for this I can go in another video to explain this. What I want to show you is how to transfer funds. So now we have money in the spot wallet, right? Let's transfer it to the margin wallet. This is what you are going to do in reality. I just did it the opposite side to put some money in there. So now you will pick the coin that you want to transfer from spot wallet to margin wallet. Simply to exchange it, click here. Available from spot wallet. Let's see why it's not showing now. Let's put it again. Okay, available. Now you you simply click confirm, and then you will be able to transfer from the money from your spot wallet to margin wallet, and now you can trade, right? Now you can trade. Now the money are here. This is how you transfer. So this is the second step, and now the third step is how to open the position finally, right? Let's come to the point to show you how to open and close margin positions. So I will show you now how to short Bitcoin, right? Let's say that for some reason, we are not going to dive into the chart right now, but let's say for some reason you want to short Bitcoin right now. How do you do that? You simply, you just like I told you, the advantage of margin trading is that you don't have to own Bitcoin in order to short it. You can simply borrow it. As you can see, in reality, I have 0 Bitcoin right now, but I still will be able to short it. Simply I have to click on the borrow mode. Here are the modes. Actually, you can see here explanation of the modes, right? If you want to, you can go through that and read. In the normal mode, it will show you how much you really have in your wallet right now. I have 0. In the borrow mode, it will show me how much I can borrow right now. So in order for you to short Bitcoin, you have to come to the borrow mode, right? Because you want to borrow this Bitcoin, sell it at this price, and then buy it at a lower price, and then this is how you make money. So now let's say that we want to enter position 0.01 Bitcoin, which is equal to, actually we can even make it smaller, 0.05 0.005 Bitcoin, right? This is how we are going to open a short position. Now this short position can be limit, market, or this one. I can go in another video actually, or we can even do it in this video. I can go through the type of orders. I will do it in a separate video because maybe most of you are already aware. I mean, you already know the type of orders. So if you don't know, don't worry, I will make another video, and you can pause this video right now, go to watch the other one that will be called types of orders on Binance, so you can get used to what are the types of orders for the one of you who don't know, and then come back to watch this one, right? But I really think that most of you will be aware of the types of orders. Because in order to start margin trading, you have to have a lot of experience trading without margin at first, right? If you want to start learning to margin trade before having experience before that, that's not a good idea. So this is why I assume most of you will be aware of the types of orders. So let's do it with the market order. The market order will simply be executed at the current price right now. Let's again type the amount of Bitcoin margin sell, and you will see that here our dollar amount will increase, right? It will increase. So actually I can do something before this, so you will have better idea. Just give me a second. Let's actually transfer this. Let's remove this USDT from here, so you will understand better what's going on. Okay, now we have 0 here, so now you will see how it's working. Again, we are on a borrow mode and we are going to enter a short position. Now what you will see when I execute this position, margin call, and we also borrow. So basically this is telling you what's going to happen. This loan will have interest, but you know the interest is not that big. So basically now we are borrowing Bitcoin, we are selling it at the current price with the idea to buy back lower. Bam. As you can see, now you have USDT. Now if the Bitcoin goes back lower, with this same amount I will be able to buy Bitcoin, right? And I will repay it. So in order for you to repay, you simply can go to the repay mode, and now automatically when you buy, this will be repaid. But first let me show you now. When you want to see your what you basically borrowed and how much you have to repay, you can either come right here and see, for example, to borrow, right? But to, I mean, if you want to borrow, you can borrow from here as well. But to see how much you have to repay, you have to come back here. So as you can see now, our total debt is this one. So this is how much we have to repay, right? And here you can pick any coin. Another way to see this is to go to your margin account from here, wallet margin account. And here you can also see everything that you borrowed, right? All your loans that you borrowed, you can see from here. You will see it down here, borrowed. You will see all the amounts that are borrowed, and basically the interest will be right here, and the interest is in the coin that is, for example, the interest here will be in Bitcoin, right? It's not going to show in dollars. And from here you can also repay. When you click repay, you can simply repay as well. Yeah, so what I'm showing you now is how, now this is the option that I'm going to show you, is how to do this automatically, right? When you go in the repay mode, simply when you buy this Bitcoin, it will automatically be repaid. And this is what you're gonna see right now. So let's buy for this whole amount and see what's going to happen. Let's do it with a market order. Let's put this price, buy for the whole amount. Oops. Okay, we bought now with our whole amount, but you see that we don't really have Bitcoin, right? Because the Bitcoin that we bought automatically went in the repay, right? This is how you automatically repay your loan. And as you can see, now we simply don't really borrow. We own this very little amount that is basically, uh, yeah, that is not even from this trade, I guess. Probably this is from before. So this is how you repay. This is how you open a short position, then how you close the short position and repay your loan, right? So now I can show you how to open a long position. Let's say that you want to enter Cardano Bitcoin, but you don't have any Bitcoin, right? So this is how you open long position. You will again come to borrow here, and you will see that you are able to borrow the amount. This amount will show you how much you are able to borrow at maximum, right? So now let's market buy. How many Cardanos? Let's say 1,000 Cardanos. How much is that? Let me just see first. 1,000. We can even go with 300. All right. What's, I mean 300? Yeah. Okay. Now we are going to market buy 300 Cardano. This is how you open again a long position without owning Bitcoin. This is a Bitcoin, I mean Cardano Bitcoin pair. I don't own Bitcoin, but I will be able to open a position, and this will automatically borrow Bitcoin for me. I will buy Cardano. When Cardano goes up, I will sell it for Bitcoin, and I will repay my Bitcoin, and the difference will be my profit, right? It's not that complicated, right? So now let's market buy Cardano, and you will see right now, you see we don't have any Cardano, right? And we don't have any Bitcoin in reality. So this is the power of the margin trading, the advantage that I told you before. Now we can buy, and you will see, bam, we have 300 Cardanos. Now, when we sell this Cardano, let's imagine that now it's already our trade played out, it's at higher price, and it's time to sell. When you sell, you're simply going to click on the repay, right? So it will be repaid automatically. And we are going to market sell all our Cardano. And as you will see, the Bitcoin will not come here, it will automatically come, it will automatically repay, right? The one that we owe. Bam. See, it disappeared from here, it automatically repaid our loan. So as you will see now, we don't owe Bitcoin, we just owe simply the small amount that is from before. Now I can show you how to do this manually as well, if you don't want to use this automatic option. Now let's again buy 300. Let's market buy 300 again. We can even go with less, with 200. Let's market buy 200. For some reason again we think that this is going to go up. You have to be in the borrower mode, right? If you are in the normal mode, you cannot open a position because you simply don't have Bitcoin. If you have, you don't need the margin trading, right, to do this. Now you can simply, let me show you now. If you don't want to use the automatic repay mode, because um, sometimes you might not want to use it, because if this position is losing money, right, you will simply repay less than you have to, and you might forget about this difference, and this will have interest on it, right? So you might want to do all this manually, so you will not use the repay option, you will simply use the normal option. Market, I'm going to market sell right now all this Cardano, and you will see here the amount of Bitcoin. Bam, now our Bitcoin is here. Now when you have the Bitcoin, you can simply manually repay it. When you go here to repay, then find Bitcoin here and manually repay the amount. And why you want to do this again, because maybe it's not clear why you want sometimes to do this, because you will be aware of the difference when your position is actually losing money. Then there will be a difference. Right now it's very small, right, from this trade. It's very small, but there will be sometimes difference here uh, with the amount that you repay back, and this difference will have interest on it, and if you forget about it, after some time you might have to pay a little bit more, right? So it's a good idea from time to time to track this stuff, right? But you can also do this from here that I showed you before. Simply when you go here, wallet, margin account, and you will see this. So you will see all this, uh, basically everything that you own, right? So you can track as well here, because again, you might not like if you own some amount and you forget about it, and after a very very long time it can have some interest that you don't really like to pay, but it's how it works. So I hope now it's clear for you how to open and close margin positions, right? This is it for this video, and how to repay. This is basically the summary what you learn in this video: how to open and close long and short positions, margin positions, and how to repay. The two different types to repay: the automatic one, when you simply use this option here, and the other one, and also how to be able to check if you have some leftovers that you are owning, right, and to repay them. So this is it for this video. All right guys, just something interesting to show you here, a very quick video. Basically, the trades that I gave you as an example, I took actually a similar trade. You remember I gave you as an example, if you enter when the price closed above here. I did not enter right here, but I enter here, and I'm actually in a similar trade like this. It's even better. So I just want to show you so you can have an idea. So basically this is, I'm sitting on a nice profit here, right? So $200. So I want to quickly show you, because this trade is still live, so I want to show you why I entered, because it might be useful for you, right? So this is the stochastic. Now don't worry if you don't know this. Basically I have a lot of courses for teaching technical analysis in depth, so if you are interested then you can check it out. I'm not going to go in details what happened. My stop loss is not even here, but I'll show you exactly why I enter and where I enter. So these are the exponential moving average 8, 13, 21, and the 55. The red one are the 200s. This is 2 hour chart. I enter exactly on this time frame. I saw price starting to, I mean, it closed above the 200s, then it held it a second time. Here, basically, this is just a perfect setup, right? I saw stochastic. This is a stochastic, by the way. I saw stochastic bull crossing, so I enter actually. You see, I mean, I entered before it bull cross, before the confirmed bull cross. That's why my price is a little bit lower than this candle. But I anticipated. I entered. It really. I mean, the cross was confirmed after that, and as you can see, this is a nice trade so far. My stop loss was under here, where you will see my alert. Even you will see my alert even on the previous videos, right? This is the alert here that I said if my stop loss got got hit to exit. So my stop loss basically is here, as in the example I gave you a stop loss here, but my real stop loss was here. So I'm sitting in a nice trade right now. So I just wanted to show you a real example now. The position size is like 0.19 Bitcoin. Don't get confused that the account is smaller than the position size. Yes, it is, but I don't keep all the money on the account. Just like I told you, why professionals use margin trading, so they don't keep all the money on the account, right? So basically, yeah, this is just I wanted to show you this nice trade that I gave you a similar example earlier, but in reality I took a trade almost, I mean, similar to this one. So this is it for this video. In the next one we are going to dive into risk management. Okay guys, this video is going to be about risk management, which is key. So first, I will show you how to calculate all this stuff, right? Because in my opinion, you have to know how to calculate it. And after this, I can attach under this video a spreadsheet that will be doing this for you automatically, right? It will calculate it automatically, but I want you to know how this always being calculated, right? Because it's useful, and to get the whole idea why you need proper risk management. So let's dive right into it. First, I want to show you how most people are using margin, right? They are using it in a wrong way to increase. They are using it to increase their profits, right? So let's imagine that that you enter here for some reason on a trade, and this trade made 10%, 10%, right? All right, so they see this as if they played with margin, 10x margin, let's say they were going to make 100%, right? Basically, they were going to double my money. Oh, I made here 10%, but this is without margin. If I use margin, I was going to make 100%. All right, this is true. But what was going to happen if instead of going up, this trade went down 10%? And you are in a 10x margin, basically 10x leverage. For example, you have $1,000 account and you are playing with $10,000 because you borrow 9 more thousand from the exchange, which is 10x leverage. And if the trade goes against you 10%, which is in reality 100%, you're gonna lose everything, right? You're gonna get liquidated. So don't do like this, guys. Use the margin for what I showed you, right? What I teach you. Don't be one of these people who use 10x, 100x leverage, and because they want to to make much bigger profits, right? But the losses are going to be much bigger as well, and this will destroy you. It will not really help you. So let's get now this out of the way and explain you what is risk management. Strict risk management means to risk maximum. I will write it here for you. This is what risk management is. Strict risk management means to risk maximum 1 to 3% of your account on a single trade. It's as clear as that. 1% is conservative, right? I advise you to do it with 1%. 3% is aggressive. 2% is normal. Basically, from 1 to 3%, I advise you to really do 1%. You can even do less than 1% until you learn to trade. If you are not good in trading, if you are good and advanced trader, of course, it depends on you. So you can risk 1, 2, 3, but I don't really advise you to go above 3% of your account on a single trade. Now, for the one of you who don't know, this doesn't mean that you will, if your account is $1,000, let's say 1%, how much is that? $10, right? It doesn't mean that you are going to enter on a $10 trade, right? Basically, to buy Bitcoin, for example, for $10. It means that if you lose this trade, you are going to lose maximum $10 if you are risking 1%. How do you do that? I will show you now how you uh, basically follow a strong, strict risk management plan. So first you have to define your risk. First step is to define your risk, right? This is step number one. To define your risk, it means, is it going to be 1%, 2%? Oops, so wait. Where is this? Is it going to be, are you going to risk 1%, 2%, or 3%, right? So if you choose to do 1%, you already define step number one, which is to define your risk. And basically, you are just going to calculate 1% of your account. If you simply, if you don't really know how to calculate it, simply multiply the size of your account. Let's say that you are trading on a $2,000 account by 0.02, which is $40. So your risk is going to be $40. This is how you are going to define your risk. If you are trading on a $12,000 account, multiplied by 0. It's actually 0.01. So basically, if your risk is 1%, it's going to be 0.01. If you want to risk 2%, it's going to be 0. You will multiply by 0.02, right? In the previous example, I think I multiplied by 0.02. But just like I advise you to risk 1%, right? 1%, not 2, not 3, 1%. So with 1%, $120 is going to be your risk. Let's do it again with $2,000, which is going to be $20, right? 1%. So you are going to risk $20 on a single trade. So this is how you calculate. Let's say that you are trading on a $42,000 account, or let's say 4,200. $42 is your risk. So let's say, okay, $20 is going to be our risk, right? Let's say that you are playing, or let's even do easier calculation. Let's put $10. Let's imagine that you are playing on a $1,000 account. You are risking 1%, so your risk is going to be $10. The second step is to define where your stop loss is, right? Let me write this down for you. Actually, I can use this one. Step number two for proper risk management. This is the process that you are going to go through before entering any trade, right? But of course, this is going to be much faster and it's going to be automatic for you. I just want to go together with you through that, so you understand the whole reasoning behind this, right? So define where your stop loss is going to be. So let's go back now uh, to the trade that I showed you, right? Let's get rid of all this. Okay, this is the one, that the trade that I showed you. So before entering a trade, you have to define where your stop loss is going to be. So basically, when I started to look for entry here, I already know that my stop loss is going to be here. So basically, let's say that you enter somewhere here and you know that your stop loss is going to be here. So before you enter, you have to know where you are going to exit. You have to know where are you going to exit before you enter. This is crucial, guys. You have to know to say, okay, if price comes down, started to go against me at this point, I know that I was wrong, this trade was not a good idea, and I want to exit. In our case here, the stop loss is 0.66% away. So this is why you want to know where is your stop loss, to see this percentage, right? How far your stop loss is from your entry. This is the second thing that you're going to need for the risk management formula, right? 0.66. So in our case, our stop loss will be 0.66%. This is our stop loss. Now these are the two elements that you need for your risk management, and this is what you need to calculate how much your position size is going to be, right? And you have to do that, guys. You should not be one of these people who don't calculate this stuff and who just simply enter all in or stuff like that, and they don't have any risk management, any stop losses, or anything like this. You have to go through this process. So now to calculate your position size, you simply, let me write it for you. Oops. This is how you calculate your position size. Basically, you will need the risk and you will divide it to the stop loss. So how you calculate this? Let's go through that together with you. 10 divided by 0. Since this is a percentage, you have to put two zeros, right? So it's going to be like this. And this is the position size, $1,515. So in this case, you are going to buy a Bitcoin for $1,515. This is actually a beautiful example. It's one of these examples where you have to now use margin, because your account is $1,000, but your position size has to be 1,500, right? This is a real example where it's a good idea to use margin, right? Because you have to stick with your risk management. You are risking 1%, and you have to be strict with it and enter in the position size that your risk management is giving you, right? So this is the perfect usage of margin, right? So this is in reality how you calculate position size. This is in reality the risk management. It's not complicated. First, you have to know what your risk is, which is going to be 1% of your account. I showed you how to calculate this. Then you are going to define where your stop loss will be before you enter the trade. When you are already looking for entry, before you entered, you will already know where your stop loss is going to be, because you cannot enter. I mean, this is why I made it like this, and basically to do these calculations, and I'm showing it to you. I mean, because before you enter, you have to know this. So you have to get this number for position size, and once you have this number for a position size, then you can enter the trade, because the position size is basically for how much you are going to buy, right? So this process is crucial to follow it. Now I'll give you this spreadsheet, and here it's going to be much easier. Here simply is you are going to put your stop loss here. This is one for stop loss. Let's say 0. Actually it's like this, 66, and let's put here, this is the risk in dollars, $10, and now you will see the position size will be automatically calculated. Bam. See, now you have the position size automatically calculated, so you don't have to do this manually. You have to simply put the numbers, but you still have to do this process, right? To know what your risk is and to define where your stop loss is going to be. But the calculations are going to be automatic here. Bam, position size $1,515, and you can enter, right? You can simply enter. Why this is so important? It's so important because trading is a game of um, it's a game of probabilities. There is no certainties in trading. What does that mean? It means that you never know really what is going to happen, right? So you have to protect your money because you never know what is going to happen. Nothing is for sure. Even the best in the world, they know that they are going to be wrong many times, right? Since you know that you are going to be wrong many times, you should not risk more than these numbers, right? Because if you are wrong too many times in a row, you are going to lose your money. It's as simple as that. This is why risk management is crucial. This is why to use margin in a right way is crucial, because if you use it in a wrong way, just like most of the people who don't have risk management, you can blow your account faster than you can blink. I mean, this is a reality. This is a reality. So this is why it's crucial. Now this is enough for this video. To summarize, you need risk management, right? For the risk management, you have to decide how much you are going to risk from 1 to 3% from your account on a single trade. There are two steps. Basically, it's three steps. This is the third step where you calculate. But this step is going to be automatic in the spreadsheet that I'm going to give you. But this is the third step. So first one, define your risk. You already know how to calculate that. Simply multiply your account size by 0.01. Second one is to define where your stop loss is going to be. This is before you enter the trade. And then simply to calculate the position size. Once you know the position size, you are simply going to buy, then set your stop loss, just like I teach you to do, and that's it. Basically, you are set to go. Okay, guys, in this video, I will talk about liquidations, right? Where to see your liquidation price. So you will come here to your wallet, you will click to margin account, and you will see this page right here. Then here are the funds basically, but you have to click positions, right? You have to click positions. Now you have BTC and USDT. You are going to go to the USDT, and for example, for my position that I am in right now, you see my liquidation price is basically, this is showing me at what price the Bitcoin has to reach for my account to be liquidated, right? But let me tell you something. If you have a strict risk management, you don't have to worry for that at all, because you will be stopped out from your position long before there is even a chance to get liquidated, right? But still, this is a video about margin trading, so of course I have to show you where to track this, right? But don't worry if you I mean, don't be afraid. If you have a strict risk management, you won't get liquidated, because these positions that I am in currently, right, it has a stop loss. The stop loss is already at break even. I cannot even lose money right now on this position because it's already in a nice profit. So even if it dumps for some reason, um, I will not lose, right? But even if it did not play out, even if it went against me and I lost, there is still no way to get liquidated because I have a stop loss, right? Proper risk management that is going to start me out of this position before I lose, let's say 1%, right, from the account. So, but still, I wanted to show you. So basically, here again in the um, wallet margin account, then by default it will bring you to the funds, but you will click positions, and here in the USDT benchmark you will see basically you will see the position that you are in currently, what's the price that it has to be reached, and here is the percentage, right? The percentage. So for example, if the Bitcoin goes down from here 53%, I'm going to be liquidated. But my stop loss is less, I mean, it's a percent and something below the current price, right? So it can not go to that level before I get stopped out, right? So this is why risk management is so important, because again, this is crucial, guys. You have to have risk management. These people who don't have risk management, only them are the one who are getting liquidated. If you have risk management, you will not get liquidated, right? Here you can see your margin level, and this is showing you when you are in a high risk as well, but you are not going to reach this point because you will be stopped out much before that. Because trust me, if you don't have risk management and you reach level when you will start sweating, and then you can lose all your money just like that. It's like I told you. So risk management always, protect your money always at first place.